Your credit score is an important factor that determines your financial health, and one of the key components of your credit score is your payment history. So when you pay your credit card bill is crucial if you want to increase your credit score. But when exactly should you pay your credit card bill to maximize your credit score? Let's find out. Now, for starters, you do not want to pay your credit card bill on the due date, and you do not want to pay your credit card bill by the due date. If you want to increase your credit score, you need to pay your balances strategically. So to do so, you need to understand a term called credit utilization. Now, credit utilization is the amount of credit you are using compared to how much you have available. For example, if you have a credit card with a limit of $1,000 and you spend $500 on it, then your credit utilization is 50%. Now, this means that you are using half of the credit available to you. Now, that is too much. A good rule of thumb is to use less than 30% of your limit on any card, and the lower, the better. The highest scorers use less than 7%. So if you have a credit card with a limit of $1,000, you want to spend only $300 or less on that card. Now, if your credit card limit is $5,000, do not spend more than $1,500. I know that seems small, and you might be saying, well, what's the point of having a $1,000 card if I can only use $300? Well, you're looking to increase your credit score, right? That's the fastest way to do it, guaranteed. Now, if you do happen to spend a high number in a particular month, ensure that you can bring down the balance quickly to 30% or even better to 10%. Now, having a high credit utilization can make it harder to borrow money in the future. This is because it can make you look like you are relying too much on credit and you may have trouble paying back. That is what it looks like when you borrow so much money as close to your limit as possible. Now, to keep your credit utilization low, it's important to only borrow what you need and to pay it back on time. You can also increase your credit limit to have more credit available, but remember to not spend more money just because you have more credit available. Now, to reduce your credit utilization, you want to remember to keep only 10% of the balance that you pay off by the due date. But before that, you want to reduce your balance to 30%, not by the due date, but by the end of your statement period. Now, let's take a look at an actual credit card statement. Now, there are two dates that you absolutely need to pay attention to. Take a look at this statement here. So this one here shows you a date of February 21st to March 22nd. Let me circle that for you. You have two dates on your credit cards. The first date is the actual closing statement date. Some credit cards would call it the statement date or the closing date. So you have this date here, and then you have the due date. Ignore for a while the payment due date. You want to make sure you pay by this date up here, the closing date. And then we will talk about why. So the due date and the statement closing date are different. The due date is like the deadline for you to pay off the entire credit card bill. Now, you have to pay what you owe before this date, or you will have to pay interest. But this date is not when the credit card company reports how much you owe to the credit bureaus. And that is the key to improving your credit score. That happens on a different day called the statement closing date. Now, when the credit card company reports how much you owe on that date, it can affect your credit score. Now, if what you owe is 10% or less of the total credit limit, then your credit score will increase. So the trick here is to pay down the balance by the statement closing date. You can either pay it all down if you can, or simply pay it down until you have just 10% of that money left. So as in our previous example, if you spent $800 on a $1,000 limit credit card, you want to check your statement carefully for the statement closing date, which is usually 5 or 10 days after the purchase. Now you want to pay it down until you only have $300 or less left to pay. Now we're using the example of a $1,000 limit card and you spent $800. Say you bought a pair of shoes for $800. Don't do that, but let's assume. Now you want to pay down that $800 until you only have $300 left. So you put $300 on the card by this date. That way, the credit bureau will see that you only borrowed 30% of your total limit and that you pay your bills on time. Now that's the number one winning strategy for how to improve your credit quickly. Now, when you understand credit utilization and you take those steps to manage it effectively, you can improve your credit score and maintain good financial health. I hope you got some value from this video. Thank you for watching, and I'll see you next time.